Okay, so welcome everybody. Thank you for the brave that are here on Sunday morning. I'm gonna I'm gonna talk today about something which I'd say it's at the intersection between privacy and compliance, which unfortunately are two faces of the same medal, we used to say. My name is Eugenio. I work in the institutional space. I have a background across policy and markets. And so, unfortunately, I have to deal with what is here compliance a lot in my daily basis. So today we are going to see a potential application on how privacy pools can be embedded into an institutional network that is working in the European Union called EBSI, which is an institutional network that is used to provide or retrieve data from identity space. So I wanted to start to give like a sort of in medias res. So what is the problem that we are addressing with this research that I am talking about? So essentially, regulated entities, in order to carry out Web3 services, they will need to comply with some sort of regulation that can be summarized in a broader concept called enhanced customer due diligence, or generally customer due diligence. This requires for those institutions to retrieve data from the customer, from the underlying different source of funds, and combine it together. Now, most of generally this process happens off-chain, but as likely we have institutions coming and offering more Web3 services, and at the same time, the new generation, we hope, will use more and more Web3 tooling. This requires, let's say, a combined effort, which is between off-chain and on-chain data, and between different networks design, let's say. So to carry out this research, I follow essentially three design process, try to having an approach as much as more adherent to privacy by design, of course being compliant with rules, and frame this research within a jurisdictional context, which is the European Union, because here we are. Here I give a glimpse of the architecture, which essentially has off-chain and on-chain components, but we will go through it later. So first of all, which is the environment in which institution generally really needs to play? To summarize it here, I collect a set of regulations which affect the transfer of money across regulated entities, for instance, exchange in our industry. The requirement for regulated entities to understand a certain set of data for their customer to prevent illicit funds to be channeled, and a list of regulations which affect token economics, MiCA, but also data management, so the authentication, the so-called trust environment, and the data process and the control, which is for GDPR. So what is the stakeholder mapping around which in the European Union regulated entities have to play? General network environments, which are composed by on-chain infrastructure like EBSI node, and off-chain governance, like a consortium made of different member states, which is called Europeum. A list of general specialized EU agency, which, for instance, manage requirement on anti-money laundering, which is, for instance, in Europe, AMLA, or other agencies, like, for instance, for other services, like for copyrights, we have the European Intellectual Property Office. Association set providers and regulated entities which operates in the private market, and of course telco and cloud service provider, and in here of course also blockchain service providers. The solution, I would say, is composed by two main layers. The first is the trust layer, which is, of course, needed because an institution needed to anchor off-chain data to some endpoints and to some liability in terms of legal perspective. So how does this trust layer works? With some digital artifacts, which are credentials and traditional EBSI node, which are composed by following the Hyperledger Besu protocol. So it's an Ethereum effective client, which a specific set of consensus rule, which is called proof of authority, which determine actually the capability to manage the data process through the nodes. In this context, through a trusted issuer, which is essentially a regulated entity which absorbs the off-chain trust, then give the user the capability to issue a digital certificate in form of verifiable credential, which is a standardized digital certificate. This digital credential is stored into a wallet and is used to prove, we will see in which way, some minimal element in form of on-chain commitment into the EBSI node. So once this data is stored into the EBSI node, all the EBSI node across the European Union can actually verify and certify the information about the users that are requiring the proving. And if anything change, of course, the EBSI node keep through a list of trusted issuer a revocation registry check, where they can actually verify if, for instance, the digital certificate of the user is expired or some set of data requirement changed, so is not valid anymore. The way in which is proving this proving effect here, it's of course big part of the magic source, because we use zero knowledge to actually abstract and reduce as much as minimum the portion of on-chain data, and this is a very sensitive topic for data management perspective, either in terms of data minimization, but also we will see in combination with the credential storage in terms of data erasure. This was the trust layer was the first layer. The second one is actually the privacy layer, which affects the money of the user. Privacy features have a very long history in Ethereum, but actually I wanted to have this section to explain how the privacy tooling evolved in a way that enabled a much more larger stakeholder to benefit from the cryptography innovation. Because, of course, traditionally mixers have issued in terms of mixing licit and illicit funds. I will make it quicker here because otherwise we don't have time. But privacy pools, which it's a solid technology which emerged a few years ago, and here I have to thank the guys from Xbox that actually helped me to draft this research, manage actually something which was very important for institutions. So to determine a sort of permission logic combining off-chain and on-chain elements that allow institutions to whitelist the funds, and so to prevent illicit funds to be used in a bad way. And the digital item which determines this is essentially the association set, which is an off-chain environment which essentially stored a list of on-chain commitments associated with the deposit of the user. So if the deposit essentially is part of the Merkle tree, the funds associated with the deposit can be withdrawn. If not, it cannot. Very simple. So how these two different layers work together? I tried to design here a quite simplistic architecture design where we have an off-chain and an on-chain environment. And essentially, the off-chain environment is where the market providers, either they interact with the trust environment or the privacy environment. Essentially, in this context, the banks, for instance, issue a verifiable credential to a user in order to prove that, yeah, this user is customer of the bank, is located in a general member state where the bank is headquartered, and so on. Now, this credential is stored in the wallet off-chain and never goes in raw on-chain. What is actually doing is actually proving some element as on-chain commitment to the EBSI node so that the EBSI node can verify the authenticity of and the conformity of the verifiable credential. Now, based on this, the association set provider, which is hosted by a multiple, let's make an example, set of banks, can run an off-chain the Merkle tree in order to determine the conformancy of the deposit, which is relayed by the wallet, because we have to imagine that we will have wallet storing credential, but also having account balances of crypto assets. So, because otherwise, this would be quite, let's imagine a future where we have 25 wallets. It would be impossible. So, in that context, after the relay of the deposit, the ASP give the consent essentially to the user to withdraw the funds. And this withdrawal is double-checked based on the conformance of the verifiable credential, which have an on-chain commitment stored in the EBSI node. So essentially, what is this user proving? Essentially, three qualities. First, the fact that I have made a deposit as a user of the bank, so relying on a verifiable credential issued by the bank. Second, through the ASP, the fact that my deposit is actually clean, holds legit money. And third, the fact that my deposit has never been used before, and this is an inherent capability of blockchain. What will look like the user journey a little bit more in a little bit more details. So this user, I call it like Alice, deposits some crypto in the privacy pools. Through the privacy pools, you may live in an application environment that is hosted by a bank or by a payment service provider or by an exchange. Okay, this application issue a verifiable credential attached to the user. The verifiable credential call the ASP that run is, let's say, risk engine to determine the compliance of the deposits and so on. And based on this, allow the withdrawal of the user. In this context, essentially, we have achieved that we have real-world identity attached to crypto assets. And the real-world identity is not, let's say, raw disclosed on-chain. We have shielded the amount, and we have made a link between the withdrawal and the real identity to the user, which is very, very important for the institutions. Let's see here what kind of use cases we could have. On the top, we see we have like a general public infrastructure because which rely, let's say, on open source software. Here I list either Ethereum and EBSI because actually EBSI has an important role in offloading liability to off-chain data while keeping actually Ethereum quite permissionless. And on top, we may have, let's say, market providers that can have different purpose. So to hide transaction of banking operation. So let's imagine that we have two banks. They have to share, they have to make an exchange of a settling of deposits intradaily. And these deposits are linked to trade operations. We don't want to have, the two banks, they don't want to have full disclosure of the full trading operations, but they want to ensure that effectively I, as a bank B, give bank, me as a bank A, I give to bank B the capability to withdraw through a legitimate source of fund. So I can essentially use the privacy pool ASP to shield this interbank settlement in order to allow the national supervisor to outline the operation from compliance perspective while keeping the strategy, the trade strategy of my bank secret. The second is maybe a little bit more, let's say, day-by-day oriented. We do a lot of payments inside companies that have some, let's say, level of privacy or sensitivity. For instance, payroll this is one example. So the idea is actually to use the shielding effect of privacy pools to make salary payment compliant and also private. And in that sense, this has a huge legal implication for HR perspective and so on. Think about that now. I think in European Union we need to, the job offer needs to have a range of potential salary, but of course nobody will say exactly how much you will be paid. Also because this is subject to negotiation, but also afterwards because of privacy. So I think that this is a very valuable use case in order to unlock stablecoin to retail day-by-day oriented people, let's say. And the third one is another one that I was thinking more from, let's say, payment perspective. Now that if you recall how merchant payment happens, essentially you have the merchant collecting a list of information from the banks and the payment service provider in order to automate the process of payments to the different intermediary, which is a shop or a restaurant or whatever. Imagine in this moment you collect all raw data unfiltered to all the intermediaries. In this context, using privacy pools, you could actually shield those information only to the merchant while ensuring the conformancy of the identity of the user, which is very important for AML perspective, to the different payment service provider or the banks that are involved, which is the owner of your banking card, for instance. So we see three different use cases. One are affected to money transfer, one to privacy and data management, and one to the legitimacy of the fund in relation to the data of the customer. Different use case, but same technology at the end. From ecosystem perspective, what is the value of this combination? I called it before like EBSI and Ethereum. The idea is that we merge two technology which share the same language because they are open source. Actually, EBSI is an execution client of Ethereum based on Hyperledger Besu, but we are able to combine off-chain environment and on-chain environment. For off-chain, I mean off-chain governance, like there is a consortium operated by a member state, but also there are institutions which are in the member states, like banks and a crypto exchange and so on, that hold huge amount of data off-chain and need to offload these off-chain data into a network which provide at the end some on-chain commitment that is linked to the authorization that they have off-chain. This is how they offload legal liability to off-chain data. And these happen essentially across these first two layers, the governance, which hold, let's say, the rules of the game of the EBSI protocol, which is a network, as I mentioned, like having proof of authority consensus, and anchored to application that hold the verifiable credential as authentication layer and the start of the onboarding process. Of course, one of the nice things of the blockchain is, of course, that blockchain is composable. So privacy pool here fits very well because they live on Ethereum, which is permissionless, and so actually can give great access to different additional tooling because you can compose privacy pools to call maybe DeFi protocols and so on. But why this institutional framework matters for privacy pools? Because at the end gives regulatory certainty to off-chain data, which is where the company are liable, because provide a system to minimize that off-chain data part that is shared on-chain, and because it helps to manage the way in which data is processed. From operational perspective, I was anticipating a little bit. This European EDIC is a digital consortium which operate on this EBSI network, which has different list of nodes across different member states, and is plugged as Ethereum execution client in the Ethereum. So these, from off-chain environment, benefit of a set of cryptographic tooling that at the end generate the possibility to combine privacy pools with identity frameworks. From a data management perspective, I wanted to summarize here like some key point. The data management compliance, it's something that let's say, already touched a little bit. It affects clarity on the data controller, the right to erasure the data because the data of the credential at the end is stored off-chain, so it can be revoked and it can break the link with the metadata of the user when it's not needed anymore. And the ZK proving minimize the commitment on chain. Of course, as a system, it has, of course, especially dedicated to institutional user, it has, let's say, trade-off in terms of permission and distribution. So this trade-off is balanced across off-chain environment where there is user identity and, let's say, the ASP deposit through, and the on-chain environment where all the on-chain commitment essentially lives. At level of the node management, there is some trust that happens in terms that will happen in terms of key management and in terms of cryptographic circuit for the ZK proving setup. But still, you see this off-chain and on-chain environment determine the capability for institution to manage, for instance, their operation with much more flexibility in terms of smart contracts management for upgrades or in terms of IT security risks. Which are the potential integration points with different users? On the origination side and on the beneficiary side, of course, the wallet for the credential and the ZK proving. Then the regulator may have access to either viewing keys or and API endpoint integration if they have to assess specific on-chain data. And the ASP, of course, connects to, I think, yes, it's an API here for updating. Yeah, so I think this is. I leave you for some question, and I hope you enjoyed.
So, do we have a question?
Thank you. Thank you for the presentation. My question would be on the European EDIC side. What is like the status of the cooperation with EDIC, and how far is this actually from being used in practice?
Well, I am not a member of EDIC, so I cannot speak on behalf of them. But what is generally public is that the consortium has been formed, and so it's really operating under different member states. It is true that EBSI is a network which is open source, so every administration can use EBSI also for its own interest.
Okay, so this is just a quick one. This is just your kind of ideation of how it could work.
That's my research.
Yeah, because I know the other side from the European one, and I know how complicated is it there, especially from.
That's indeed my research and how I see it valuable to connect with Ethereum for some services that are offered by institutions.
Hi, thanks for the talk. Do you know what is the compatibility with the mainnet Ethereum regarding the included EIPs and, for instance, the opcodes and so on?
I know that several L2s have implemented different DID projects. So on level of L2 level, there is, I think, enough choice in terms of services. Now, for EBSI, is indeed true that EBSI has, let's say, limited compatibility with the mainnet itself because of its consensus design. But it's also true that big part of the DID service, which I described here, can be completely managed off-chain, and actually I would encourage to do so because this minimizes entirely the exposure of identity data of the user on-chain. So the idea here was to generate the verifiable credential associated with the DID and do the verification process off-chain so that only the on-chain commitment of the check that the user holding the verifiable credential is doing is posted on the EBSI node. And this can be relayed to other Ethereum clients.
Thank you. You also mentioned on the slides that you need to get the approval to actually deploy the code. Mm-hmm. Can you elaborate a little bit on that process of the approval?
There is what is described in this slide. Sorry. What is happening? What is described in this slide is essentially here. What is described here is a set of chain rules that determine the root of trust. So there is an entity which has a legal requirement to operate some checks about some data of the user, and because of this is entrusted to issue this digital certificate. That's why this design requirement fits very well with network design which has a permission authority on top, because this trusted issuer is also entitled to, at the end, check the revocation on the revocation registry and allow the wallet to post the proving results.
Thank you very much, Eugenio. Unfortunately, we don't have a room for any further questions, but if you do have a question, please reach out, Eugenio.
Yeah, happy to take it offline.
Thank you again.